Welcome to Department of Distance and Continuing Education, University of Delhi. Master of Business Administration, MBA, Semester 1, Core Course MBAFT 6104, Accounting for Managers. Lesson 9, Recent Development in the Field of Accounting. 9.1, Learning Objectives. Explains some of the recent development in the field of financial and management accounting. Overview special issues of accounting like inflation accounting, historical accounting, environmental accounting, etc. Explain the recent development in the field of accounting with respect to technology. Overview of health accounting based system. 9.2 Introduction. One of the prominent roles of accounting is the recording of financial transactions in a summarized and presenting them in a meaningful form in the form of profit and loss account, balance sheet, and cash flow statement. These three statements are also used in companies in preparing companies' annual reports, but some statements are being prepared for internal use also. A number of statements are being prepared by cost accountants, and their main motive of preparing these statements is to have knowledge about cost of production. Due to globalization and changes in the world, the accounting field is also witnessing many changes. The work of accountant is also being changed due to coming of new technology. Now, the image of accountants have also been changed as compared to traditional accountants sitting with strained faces and a huge amount of files on their tables. Nowadays, our accountants have become modern and are well updated with the latest information in the market. Modern accountants are going with these changes and are aware about all the intrinsic details that are needed to manage the business in a different manner. The tax laws are also being simplified, and due to this simplification, the role of accountant is also declining. When machines are playing a major role in industrial world, then it is the responsibility of accountant to provide materialistic based information of the company. Today, in many companies, knowledge have become the greatest asset. Now, social behavior is coming in the corporate sector instead of preparing statements of long nature. Now, accountants have to provide additional information also. Nowadays, special reports are being prepared by the accountants. The emerging trends in the field of accounting have provided many opportunities to business, and they can face challenges efficiently in this dynamic and globalized world. In this chapter, some of the reports which are being prepared nowadays is being discussed and also highlights the recent developments that have taken place in the field of accounting. In the technological world, it is expected that accountants should be more intelligent as conventional accounting is diminishing and computerized accounting is taking place. In this chapter, an attempt has been made that the students will study the various developments in varied branches of accounting like tax accounting, health accounting, social accounting, international accounting, etc. 9.3 Inflation accounting. Inflation can be defined as the percentage change in the price level from the current period. The prominent role of inflation accounting is to check conventional historical cost accounts which are being used in the understatement of inventory and plant and which are being used in the production of goods, the cost of goods sold, and depreciation in order to prevent erosion of capital during inflation. Inflation accounting being used to give information that is beneficial for the potential and present investors and also to creditors in making decisions and also assessing the timing and uncertainty in cash receipts which can be in form of dividends or proceeds from the sale of redemption of securities or loans. The main objectives of inflation accounting is to show the real profit and loss for the period under consideration against the profit or loss based on historical cost. To show the real value of assets and liabilities instead of showing on the basis of historical cost. To see that sufficient amount of funds will be available when replacement of assets is being done. Inflation accounting can be calculated by two methods: current purchasing power method and current cost accounting method. 1. Current purchasing power. Under this method, monetary and non-monetary items are shown separately. The accounting adjustments for monetary items are being shown by recording of net gain or net loss. Non-monetary items are being updated into figures according to inflation conversion factor, which is equivalent to the consumer price index at the end of accounting period, which is being divided by consumer price index when the transaction is being done at a particular date. 2. Current cost accounting. This method calculates assets at their fair market value, rather taking into consideration the historical cost, which is the price incurred when the asset is being purchased. Under this method, both monetary and non-monetary items are shown at their current values. Inflation accounting can be better understood with the help of following practical examples. Practical example 1. Inflation accounting is being used by a company for adjustment of its equipment value in 2022. The equipment was purchased for 20,000 in 2006 when the price index was 116 and the price index for 2022 is 180. The new value using the CPP method can be found out as current index price is equal to revaluation from 2006 to 2022. Historical price into conversion factor, that is 2000 into 180 divided by 116, which is equal to 60,000. Now the new value of the equipment is rupees 60,000 in 2022 based on conversion factor of 3, and this new value would be recorded in the balance sheet as the closing value at the end of the period. Practical example 2. Calculate the net monetary value. Current assets in January 2020 is 30,000 and December 2020 is 42,000. Current liabilities in Jan 2020 is 35,000 and in December 2020 is 45,000. Retail price index is 250 in Jan 2020 and 350 in December 2020. The annual average is 300. Calculate net monetary value. Monetary liabilities is equal to 35,000 into 350 divided by 250, which is equal to 49,000. Increase in liabilities is equal to 10,000 into 350 divided by 300, which is equal to 11,667. End of balance current liabilities is equal to 45,000. Gain on holding liabilities is equal to 15,667. Monetary assets is equal to 30,000 into 350 divided by 250, which is equal to 42,000. Increase in assets is equal to 12,000 into 350 divided by 300, which is equal to 14,000. Balance at the end is equal to 42,000. Net gain is equal to 14,000. Net monetary value is equal to 15,667 minus 14,000, which is equal to 1,667. Activity 1. A company provides inflation adjusted accounting. In your opinion, who gains the most by using such kind of accounting? In-text questions. 1. Inflation is measured by blanks. 2. The CPP method distinguishes between blanks and blanks. 3. CPP is a mixed method in which blanks are prepared on historical basis. 4. The current purchasing power method is also known as blanks. 9.4. Human resource accounting. In manufacturing units, most of the assets are in physical form, and these assets can be easily traced and valued. The value of the firm can be easily calculated without much difficulty. Manufacturing firms have other assets also other than physical assets like intangible assets, goodwill, brand value, etc. Human capital is the most important factor in any organization, and they do things that ultimately lead the company to the path of success, and the importance of human asset is mostly seen in software firms. Can it be made possible to assign value to every individual working in the firm? It is an important question that human beings should be valued as they form an important asset in the firm. Yes, human valuation is considered very necessary. It can be said that HRA is a system which informs management about various changes taking place in the human resources of the company. In the accounting process of how investments are being done in people and what can be the replacement costs of such human resources working in the organization. The present accounting system is not in a position to provide the actual value of human resources working in the organization who are showing their knowledge and capabilities at different level. This will indirectly affect the investments to be done in near future of the company as the cost incurred on training and recruitment of human resources increases day by day. The information which is being generated by HRA systems can be used in taking a variety of managerial decisions like selection, recruitment, planning, analysis of turnover, and capital budgeting, and these kind of decisions will save the company from any trouble arising in near future. Most of the companies in India like BHEL, Reliance, and Infosys have implemented the concept of HRA system and are also working on it. Infosys have started showing human resources as an asset in its company's balance sheet, and due to this Infosys is enjoying high market valuations and earning good profits in the market. Thus, human resource accounting can be defined as the measurement of various costs and reporting those costs and value of people as organizational resources. There are several kind of methods used in human resource accounting, which are capitalization of historical cost method. This method was developed by William Pyle in 1967. Under this method, the amount incurred on recruitment, training, and selection of the employee is capitalized and written off from the value expected from human resources. Thus, for this purpose, a proper record is being maintained about the expenses incurred in recruitment, selection, and training of employee. Some amount of the expense is written off from next year so that some value might be left for the human service provider in the next year. Replacement cost method. This method was developed by René Slackert and it tells about the cost of replacing an existing human resource in an organization. It also indicates the amount spent on training, recruitment, and selection of human resource in an organization. This method is more realistic in nature as it reflects the current values of human resources in any organization. Opportunity cost method. This method was developed by Kiman and Jones for a company who was engaged in bidding services. Thus, opportunity cost means the cost of an asset which can be used in an alternate way. The value of human resource is calculated on the basis of the cost of the individual. If the employee is recruited from external source, then it has no opportunity cost. Economic value method. According to this method, the value of human resource is measured according to the contribution made by an individual in an organization. This method estimated the total cash inflow generated by a person for his services in an organization. Standard cost. The standard cost method reflects the total cost incurred in recruiting and selection of human resource in an organization. According to this method, the economic value is the amount spent on the entire workforce and it is equivalent to the money incurred on training and hiring of a human resource during the accounting period. Cost benefit method. Under this method, the estimated benefit is being calculated which an employee gives to an organization. After estimation of benefits, the value of the benefits is being calculated which an employee gives to the organization, and the difference of the benefit is the real value of the human resource. Non-monetary method. This method relies on ratings and indices. It is a kind of behavioral assessment technique of an individual which gives rating to the individual according to his performance. This method measures the skills of the employee and also measures the attitude of the employee towards the job and tries to evaluate the performance of the employees and also assess the capabilities of employees for promotion purpose. Human resource accounting also operates through various models. These models are Lev and Squads model. This model was given by Lev and Squads and they estimated the future earnings during the remaining service life of the employee which is arrived by discounting the cost of capital. When quantifiable data is available, then this method is being applied for ascertainment of human resources. Under this method, all the employees are classified according to their age groups, and then the average is worked out according to their ages, and the total earnings are discounted at the cost of capital, and this is the value of human resources. Eric Farmholtz model. This model was developed in 1996 by Farmholtz, and this model is an improvement on the present and future value of earnings. This model considers the movement of employee from one place to another, or earlier death or retirement. A 5-step approach is followed for calculation, like forecasting the expected service life of the individual and then identifying the role each one is having in the organization and the position held by an individual, and then estimating the future probability and then discounting the value at a predetermined rate. Morse model. This model says that the value of human resources is equivalent to the total benefits derived by an organization from the service of its employees. In this method, gross value is calculated and then the value of direct and indirect future payments is worked out and the excess value of human resources is worked out. Likert model. This model was developed by Likert in the year 1960 to start research in the field of human resources. This model works on 3 variables like casual variable, interim variable, and end result variable. Ogden's model. This model was given by Pekin Ogan in 1976, and this model was the extension model of net benefit approach. According to this model, the uncertainties that are going to arise in the near future should also be taken into consideration, and also the net benefits which an employee will derive should also be taken into account. In-text questions. 5. Blank's model was the extension model of net benefit approach. 6. Blank's model works on variables. 7. Ogden model was launched in the year blanks. 9.5. Social accounting. It can be defined as when a person or firm is answerable to other people for his action and deeds in the society. Profitable and good organizations are now engaging stakeholders, suppliers, consumers, regulators, non-government organizations, and communities at large to have a dialogue in open forum at all levels of the company, which will affect the decision making and various business activities in a firm. Companies are now volunteering information from the stakeholders so that their social performance can be measured and the stakeholders become accountable for their social performance by giving such information to the firm. In many developing countries, social and ethical accounting and auditing practices is still a new concept. Therefore, it can be said that social accounting and auditing build such kind of framework which helps the organization in building the existing documentation practices followed by the company, and such kind of reporting framework bounds the company for its social performance. By building a social reporting framework, the company can frame up an action plan for the improvement of its performance, and it will also help the firm in understanding the impact on the community, and the company will be accountable to the society for its performance and to all its stakeholders also. If a company is engaged in social accounting, then it will enhance the image for the company. Some of the important indicators which are to be included in social accounting framework is health and safety of the employees, relationship with the stakeholders towards the company, what measures taken for employment equity, what standards are being followed by the company regarding environmental performance, how much a company is investing in social projects, what quality of products and service is given to the society, what kind of quality is being opted by the management. 9.5a. Environmental accounting. Environmental accounting can be defined as the accounting contribution of the accountants towards the measures for environmental sensitivity taken in the organization. This concept gained popularity in the 1990s. Practical developments in the field of environmental accounting witnessed a tremendous growth in the recent, and this is also being highlighted in the various research activities undertaken in the field of environmental accounting. It can be concluded from various research that environmental accounting plays a very important role in operations of daily routine nature and not disturbing the environmental conditions in the society. The accountant's capability towards environment in firms can be reflected in their accounting auditing and reporting skills. The work of the accountant while handling environmental issues is not only applicable for internal purpose but also extends through outside world. Accountants are also responsible for disclosing the environmental information in the corporate reports, and they can use any other medium of communication for disclosure of information related with environment. It also reflects the accountability of the firm and accountants towards the society at a larger scale regarding issues related with environmental consciousness. 9.5b Sustainability Accounting. Sustainability accounting is also known as social responsibility accounting, and it also provides information to regarding social and economic sustainability to various interested parties. Sustainability accounting works on three dimensions: economic, social, and environmental. The economic impact means that through organization operations, how much of livelihood is generated in the country. The company is able to provide sufficient employment opportunities also have an economic impact in the society. The company also manages the social and environmental risks by identifying what kind of resources are hazardous and can harm the society and disturb the environmental conditions in the society. Nowadays, most of the companies are engaged in CSR activities for the benefit of the society. Recycling of the waste paper and converting it into a notebook is an example of sustainability accounting. 9.5c National Income Accounting. This kind of accounting analyzes the economic activities of the nation. It analyzes the total expenditure which is being incurred by a country while performing any business activity. It can also be referred as a government system of bookkeeping which measures the economic activity of a country. It also includes the total revenue earned by domestic corporations, how much amount paid for the wages, and also collects the sales and income data of the companies. It also helps in assessing the current standard of living of the people in the country and also assesses how the income will be distributed within the population. The formula for calculating national income is Y is equal to C plus I plus G plus N minus M. Y is national income. C is personal consumption expenditure. I is private investment. G is government spending. X is export and M is imports. The concept of national income accounting can be better understood with the help of following practical example. Calculate national income, particular amount in lakhs. Compensation of employees 2500, rent 1300, interest 750, mixed income of self-employed 7500, net current transfer to abroad 700, net export minus 600, net indirect taxes 2000, net factor income to abroad 560, consumption of fixed capital 620. NDP at factor cost is equal to compensation of employees plus mixed income plus rent plus interest plus profit, which is equal to 2500 plus 7500 plus 800 plus 750 plus 1300, which is equal to 12,850. NNP at factor cost. NDP at factor cost plus NFIA, which is equal to 12,850 minus 560, which is equal to 12,290. In-text questions. 8. Blanks analyze the economic activities of the nation. 9. Recycling of waste paper is a part of blanks. 10. By building a blanks framework, the company can frame up a plan of action. 11. Which accounting is also referred as government system of bookkeeping? Blanks. 9.6. Health accounting. The main motive of any healthcare industry is prevention and treatment of a disease. The ultimate goal of any hospital is to help the patients in living a healthy and a longer life, and this can all be possible if a proper accounting system is practiced in hospitals and a proper budget is being prepared by the hospitals to have an idea how much money is coming in the hospital and how much money is going out of the hospital. This will help the hospitals to plan out their facilities offered in a better way. Health accounting is that branch of accounting that lay emphasis on the collection and reporting of financial information regarding with healthcare organizations. This kind of accounting can be used by doctors, patients, nurses, lab technicians, etc. Certified medical accountants and health managers are responsible for the maintenance of all the accounting records of the hospital. They keep a record of financial reports, balance sheet, and other financial information of a healthcare organization. There are two basic types of information rendered by the hospital's balance sheet and income statement. The balance sheet of a hospital depicts its assets and liabilities, and income statement measures the revenue earned and expenses incurred by a hospital. The income of the hospital includes donation, amount received from trusts, grants received from government, patient fees, and operation charges also form part of hospital income. Special registers are being maintained by hospitals for the income, and it is to be incorporated on a daily basis. The expenses of a hospital include charities, establishment expenses, purchase of surgical equipments, etc. The income statement of a hospital is shown below in the table. Actual amount, budgeted amount, actual amount, and budgeted amount. Daily income. Income from routine service, less reduction of patient income, add non-operating income, grants from government donation, less expenses dietary operating rooms, professional care of patients. In-text questions. 12. Grants received from the government is blanks. 13. Blanks maintained by hospitals for incorporation of income. 14. Which accounting lay emphasis on collecting information of hospitals? Blanks. 9.7. International accounting. Most of the Indian companies, especially in pharmaceutical and software industry, are also operating overseas. Liberalization in trade has compelled most of the Indian companies to become multinational firms in the near future. When firms starts operating at global level, then not only it affects the manufacturing activities, but marketing activities of the firm are also affected, and it also affects the investor activities also, who are engaged in different business operations of the firm, and it becomes very difficult for a firm to locate all these business operations under one roof. Accounting standards vary from country to country, and investors who are the stakeholders in the firm expects that the financial statements of the company should be prepared according to the accounting standards followed in the country, so that they find it easy for comparison purpose of one accounting standard with the other accounting standard of other country. This can be explained with the help of an example. If you are a shareholder of Reliance or Hindustan Lever, you would like to prefer that the accounts be prepared under the Indian GAAP. But if an investor of Reliance in USA has majority stake in Reliance, would demand to prepare the financial statements according to the GAAP followed in their country. This consolidation of data of different countries should also be reflected while preparing financial statements. This consolidation becomes more complex if varied investors are located in varied countries. Nowadays, most of the companies have started giving financial statements using majority countries GAAP so that the investors from other countries are also satisfied. In-text questions. 15. The account in which the financial statement of the company and its subsidiary are added together is known as Blanks. 16. Which concept motivated Indian companies to become multinational? Blanks. 9.8. Creative accounting. According to Cambridge Dictionary, creative accounting is the use of methods of recording financial information about a company which are legal but which do not show the real situation clearly, usually making the company seems more successful than it really is. So many means are available in accounting world for manipulation of figures, but the most popular way of manipulating is profit, and this is being done to avoid excessive taxation in the near future. The tax figures calculated from various books of account are found to be generally incorrect, and the manipulation of figures is being done at the grassroots level. Manipulation of figures and data is being done by some companies to show that their financial position of the company is in a sound condition, and the investors would start investing in their companies. The most popular methods of creative accounting are: 1. Companies showing a wrong estimation of inventory. A wrong estimation of the inventory is being done by some companies to overstate the value of inventory. This is being done to show that their cost of goods sold is good, and when cost of goods sold is good, then the profits of the company will also increase in the current year, and which will reflect a good sound financial position for the company. Contingent liabilities not shown properly. This method is very technical in nature. The contingent liability is not reflected in notes to accounts, and thus it will give the impression that the company is not having any contingent liability. 3. Showing expenses at a lower value. Companies show expenses at a lower value, and this is being done when any client makes a payment in the form of cash or an outdated check, and this practice will help the management to book the expenses at a lower rate every year, and fewer expenses will be reflected in the books of account, which will help in attracting investors. 4. Manipulation in depreciation methods. This technique is being used by companies to have a good impression among the investors. Companies make a change in the method of depreciation by sampling, putting a disclaimer, but in reality, no estimation can increase the life of the asset. The company management sets up an imaginary lifespan of the asset which is much higher than the expected level. This will show a lesser depreciation value, and due to this, the salvage and asset value of the company will increase. 5. Manipulation in revenue and sales figure. This manipulation is very common and is being done by most of the companies. Sometimes the revenues will be lowered down in order to evade taxes, and sometimes revenue figures will be raised to show that the company is earning profit and will attract the potential investors in the company. So many companies are following creative accounting techniques, but a very famous case where fudging of assets, liabilities and profit has been done was the case of Satyam Computers in 2008, which inflated its assets, cash and bank balances of more than 1.5 billion and also overstated its debtor position to 100 million. In-text questions. 17. Blanks is a method of recording financial statements which are not real. 18. Fudging of assets and liabilities is called blanks. 19. Which scam regarding creative accounting occurred in 2008? Blanks. 9.9. Project accounting. This kind of accounting focuses its attention on the transactions of financial nature related with the management of the project, which includes cost of the project, billing of the project, and revenue earned from that project. Project managers and accountants are being appointed by the company to look after the working of the project, and project managers mainly rely on the advice of project accountants who give them the data about the status of direct cost, overhead cost, and any other revenue earned in a specified period of time. Project managers prepare the reports on the data furnished by the project accountants, which helps in making a project budget. Various revenue recognition methods are being used in a project, but the most common revenue recognition methods are: 1. Sales basis. Accountants keep a record of the revenue when the sales take place, and sometimes when the goods are being built, which means when the exchanges of goods and services have taken place. For example, if a customer pays for the RO service, then the company will record the service in its payment book when the service has been delivered to the consumer. 2. Installment method. This customer is being taken into consideration when the consumer pays the amount in installments. For example, in construction linked project plans, the customer has to pay the amount in installments as the work is being done on step-to-step basis. When a customer will make a down payment on the completion of the first floor, then the company will record in its payment book as revenue. 3. Percentage of completion method. This method is being used when it is a long-term contract. The service providers will be able to generate revenue only when the work is being completed on a percentage basis. This method is commonly used in engineering and construction firms. For example, 75% of the work is being done by the contractor, then the cost of 75% work done will be calculated and accordingly the payment will be made. 4. Completed contract. This method is being used when the requirement of percentage completion method fails. When the project is being completed and all the deliverables are handed over to the customer, then the payment is being made, and only when the contract is completed, then the service providers will generate revenue. 5. Cost recoverability. Under this method, the gross revenue will not be recognized until and unless the cost is fully recovered, and after the recovery of the cost, further income will be shown in gross profit. In-text questions. 20. Blanks looks after the work of the project. 21. Blanks method is used in long-term contract. 22. Which method is being used when requirement of percentage completion method fails? Blanks. 9.10. Tax accounting. Tax accounting can be defined as the collection of information for the calculation and reporting of taxes instead of preparing this information in the form of financial statements. This kind of accounting is being managed by Internal Revenue Code and not with the provisions of GAAP. This code highlights certain rules and regulations to be followed while filing of tax returns. There are 4 components in tax accounting which are being represented with the help of the following diagram in front of you. 1. Deferred tax assets. This component occurs because of the difference in timing's book value of profits and profits which are being taxable. For example, provision for bad and doubtful debts is deducted from debtors in normal course of accounting, but when taxation point comes, provision for doubtful debts can be allowed as bad debt if it is being declared as bad debt in the current, which may or may not be a possibility that it will occur as bad debt in the current year. In such a scenario, the taxable profit will differ. So, we can say that the extra amount of money which a business pays in the form of taxes due to provision amount not eligible for deduction is known as deferred tax. 2. Deferred tax liability. This kind of liability also arises when there is a difference in timings and the taxable profit is less than the accounting profit. It can also be defined as the amount of taxes which the company has underpaid but will be paying in the near future. This can be explained with the help of following example. ABC Company Limited sells a wooden furniture for Rs 2000 plus a 20% sales tax payable in monthly installment. The customer will pay the tax 400 plus 400 for 2 years. In financial records, the company will show as a sale of Rs 2000, but for tax records it will be recorded as 400 for 2 years. The deferred tax liability would be 400 into 20%, which is equal to 80. 3. VAT accounting. VAT and GST are not considered as an expense, but these go by a different tax procedure for payment and credit of taxes, and also follow a procedure regarding invoicing and registration of taxes. 4. Transfer pricing. When the world is becoming a globalized village, Most of the companies are opening and operating in different parts of the country. The exchange of goods and services takes place between different units of other country. Such kind of transactions give a rise to transfer pricing concept. The main idea behind such concept is that the main entity must not get the products and services at a lower cost if the same product is being sold to third party. For example, if a company is opening an office overseas, then it has to pay a certain percentage of tax on the expenses the company incurred in opening of the office overseas. 5. Income categorization. In normal accounting, only an extract of receipts and payment is being prepared, and we consider all kind of receipts and payment while preparing such an extract, but for tax purposes all receipts and payment are not taken into consideration, and this can be explained with the help of following example. Table 1 shows profit and loss account of ABC Limited. Particular amount: to rent 6,000, to salaries 13,000, to other expenses 9,000, to net profit 25,000, total 53,000. Particular amount: by gross profit 40,000, by interest on deposit 6,000, by profit on sale of land 7,000, total 53,000. Table 2, statement of profit and loss for taxation purpose. A business income, blanks, gross profit 40,000, less all expense, rent 6,000, salaries 13,000, others 9,000, 28,000, 12,000. B. Income from other resources 6,000. C. Long-term capital gain 7,000. Total income 25,000. In table 1, one can see the extract, and in table 2 how categorization of all types of income is being done. In-text questions. 23. Collection of information for tax purpose is known as blanks. 24. Full form of GST is blanks. 25. When taxable profit is less than the accounting profit, it is known as blanks. 9.11 IT development in accounting. Accounting is one of the earliest professions which have witnessed the early computerization in the commercial world. Today, we are on that phase where most of the accounting operations are being done with the help of computers. Most of the companies nowadays are using ERP system like SAP, PeopleSoft, etc. ERP helps in integrating all the functions of the department with the help of software through a common database. For example, if you are a good planner and want to operate through ERP system, then it should be operated in such a manner that if inventory level comes down to a certain level, then the ERP system will automatically generate all purchase order in electronic form on the same day the order is being placed with the vendor. When the material is being supplied by the vendor, then it has to make dual entries, one at the store level when receipt of the order takes place and one at account level for data invoicing. The machine will compare both the data and pass the bill for payment. When the due date will come, automatically the checks will be printed in electronic mode. One of the recent developments that have taken place in the field of accounting with respect to information technology is cloud accounting, blockchain accounting, and artificial intelligence systems. 1. Cloud accounting. Cloud accounting has revolutionized the world of accounting, which helps in providing a real-time solution to varied problems. Before coming of cloud technology, the accounting software were desktop based and one has to access the actual application from the hard drive of the computer. And the major disadvantage was the updation of software, which was very costly. Cloud accounting is a kind of accounting which has same kind of functions, but the whole process operates in cloud. There is no desktop application and all the data is saved in a cloud server. It gives 24/7 accesses from any location and thereby removing the need for accessing from the central computer. It also helps in real-time reporting and also helps in examination of current financial position of the company on periodic basis. 2. Blockchain accounting. Blockchain accounting gained popularity in accounting field when the height of Bitcoin was looking fancy and suddenly its value crashed in the year 2017. At that time, a decentralized database was built which helped in real-time verification and communication of information. This was linked to a Google accessible document to network members. Different members were given different access levels and they can access the network from different places. And each level was having a cryptography and other tools which help in providing information on various cryptographic currency. 3. Artificial intelligence systems. It helps in collecting and analyzing voluminous amount of data which expects a lot of exercise to be done by the accountants in traditional times. Data collection has become very easy with the coming of artificial intelligence systems. It analyzes a huge amount of data with the help of algorithms. Now, the work of audit has also become easy and database can be presented in the form of spreadsheets. Sales forecasting reporting and tracking has also become easy due to coming of artificial intelligence system. In-text questions. 26. Blanks analyzed stored data in cloud. 27. Blanks is the study of cryptos. 28. Which system helps in collecting large voluminous amount of data? Blanks. 9.12. Forensic accounting. Forensic accounting can be defined as the investigation of frauds and misrepresentation of facts. In forensic accounting, one conducts an in-depth analysis of financial data. Accountants use it to prepare a detailed report and submit the findings of the report for judicial proceedings. So, one can say that forensic accounting is being applied which uses scientific techniques and helps in detection of various kind of fraudulent activities. Advances in technology and increase of various scandals and scams have increased tremendously the need for forensic accounting. In-text questions. 29. Blanks analysis is undertaken in forensic accounting. 30. Blanks reports are submitted in court of law. 31. What kind of techniques are being used in forensic accounting? Blanks. 9.13. Summary. Accounting is a combination of various monetary transactions which take place between the company and the others who prepare the financial statements. Accounting information is being used by various interested parties. Nowadays, the information is being presented with the help of various accounting softwares. As the world is also changing at a faster pace, it is the requirement on the part of accountants also that they should upgrade their knowledge and skills. Top management of the companies also now expect that accountants should use modern tools of accounting while preparing balance sheet and income statements. So, it has become the need of the hour that accountants should be computer savvy and should be familiar to work in a computerized networking environment. Today, the accounting process is becoming centralized and shared service providers are coming to look after the reports of the companies. So, it is the duty of the accountant to have a thorough knowledge of all the developments taking place in the current scenario. 9.14 Glossary. 1. Project accounting. It focuses on the financial transaction related to managing a project. 2. Tax accounting. It refers to collection of information for reporting of taxes. 3. Forensic accounting. Collection of data and reporting fraudulent activities. 4. Cloud accounting. An online accounting in which data is stored in cloud. 5. Blockchain accounting. A decentralized database for verification of accounts. 6. Transfer pricing. The exchange of goods and services takes place between different units of the other country. 7. Deferred tax liability. This kind of liability also arises when there is a difference in timings and the taxable profit is less than the accounting profit. Thank you for listening.